Bismillah, time now is 9:32 p.m. Eastern Standard Time. Just going to get into some price action review of whatever comes to my mind while I'm looking at price action. Ideally, the ES, the NQ, dollar. Let's see what happens. Again, we just want to review same thing pre-market. Prior to putting on any trade, these 7 fundamentals should be the core of any system, so to speak. You need these things to show up to the market the same way every time, right? While you're in the trade, while you're outside of a trade, and after the trade. So these are just literally like segments of time and reoccurring, repeating themes. Before the trade, during the trade, and after the trade. So again, proper preparation. You got to put the work in. You got to identify if price is, respective to your time frame you're trading, your style of trading. Is price in a trading range? Is price has the potential to trend higher or lower? AKA break outside of that range. Otherwise, you just trade inside of the box, right? Reduce your time frames until you see something that's that you have a playbook for, or trade setup that will that has a potential, a high probability of yielding you some good results, aka one good trade. Hard work, pretty much sticking to your guns, staying focused, hyper focused if you can. Being patient until your trade setup develops and a detailed trading plan for every trade. I kind of incorporated one good trade with the 6 thinking hats of Eddie DeBono. This is a systematic way of thinking or decision making, like a decision making tree. These also are reoccurring hats. You can so to speak, take on, take off. Time for white hat thinking, time for black hat thinking, so to speak. So discipline aspect would be you being cautious and pretty much taking your time in the trade, being cautious and applying your critical thinking skills. Communication. While you're in the trade, you want to kind of like find reasons to add, reasons to exit. Pretty much you should have those things in mind prior to putting on the trade. And you also want to convey your trade ideas with other people, like-minded individuals, or at least compare your. If you're not the type of person that gets shaken or shooken up when you hear someone else's ideals about trading, then you should be sharing those ideals with others if you can. And at the very least, you should be journaling. Some of us journal throughout the trading day while you are in the trade, kind of like keeping yourself aware of what price is doing. It's kind of like self-talk to some extent. Calling out what you see, writing down what you see, key price levels, because you are trading at the far right of the screen as price kind of like develops. And depending on your time frame, you have whatever time frame you are actually trading on, you have more time, so to speak, or specific time frame to develop those ideals and flesh them out and kind of like plan to exit or add or hold those trades for longer times. Likewise, you want to replay important trades, trade ideals, trade setup that you see or missed. So it says here, revisiting the information and learning from past trades. Traders should analyze their trades, identifying areas where they could have done better, and planning improvements for future trades. Anyway, today there was no high impact news in the U.S. Tomorrow there's no high impact news as well. There is some New Zealand high impact news at 10 p.m. I'm not really concerned about that, but it is something on the radar just in terms of watching price action and seeing what happens at that time frame and how price reacts to it, and potentially have the impact it may have on Wednesday's London session, Asia session, London session, and eventually the New York AM session, etc. All right, so let's get into it. It's pretty much where we left off yesterday. There's the dollar. As I mentioned in the previous video, let's take that off. As I mentioned in the previous video that I wanted to see, obviously, just to reiterate, step one is the run on buy side liquidity here, and I highlighted the market structure shift down here with this candle, and also I highlighted the discount to premium, meaning that price is let's say you didn't want anyway. Now, so we're just looking for price to be kind of like retrace back above 50% of the range, meaning if we are expecting shorts, then 50% of the range means that price will be at a discount again. It will be your entry. Ideally for this setup, optimal trade entry setups, you're looking for price to trade into the 78.6, 61.8 range. Ideally, sometimes you don't get that steep of a pullback, but you want to look at the very minimum above 50% of the range, and then look for some type of entry model. Yesterday we highlighted this bearish fair value gap and also this daily volume imbalance, and you kind of look back here, you can see another volume imbalance, and you can see price kind of reacted to that as well. And you can also see that it's not necessarily, if that's your trading system, your trading style, then yes, pay attention to it. If it's not, then let it go, right? And you can see that price reacted to this level, or you can say you don't see it. Who cares, right? Stick with whatever works for you. And in this case, it would be you can indeed use the volume imbalance, or you can just use the fair value gap. There's some other things here. If you were using that, you can use this order block, bearish order block, etc. That's not if it's not part of your trade setup, then it doesn't matter. Don't think you have to trade like everyone else. All right, so as I mentioned yesterday, we'll look for price. Not sure if I mentioned, but we want to look and see price holding below consequent encroachment of the fair value gap, which adds to the potential validity of price going lower. But anyway, I did mention that we want to see price hold below this fair value gap, and also price holding below this volume imbalance, and you can kind of see that price respected this volume imbalance. They didn't even bother getting up to this consequent encroachment of either this fair value gap or this wick as well. So but it did pretty much just for let's see, it's at 2.02 difference between the high and the volume imbalance and the high of this wick. Anyway, that's insignificant to me, but all right, so we expect the lower prices. Obviously, you think of the power of three. You have this like price open here, you have this fake run up here, and then you have the real move here. So there that go. We can keep it moving. Let's say we were looking for trades here. Here is you can still see that price is having Uh, Friday is an inside day. Well, not really an inside day, but it's still inside of this price leg here, this price range. And you can see that today is still inside of this price range, which is inside of this price range. So, and we have this setup here. The 1 hour looks very, very suspicious here. You can erase that. Have these relative equal highs here. Have relative equal highs here as well as here. And also you have, so this looks like a purge and revert setup here. We have price purge this low. You have price breaking structure here, pushing higher the next day, and a retracement. I wouldn't be surprised if price kind of like went higher from here. Ideally you want to look for trade setups while there's like high impact news, some type of catalyst. S&B Capital will call some reason to make it in play, right? So we'll see how that goes. So this was technically tradable today. This is the Asia session. You have the Asia session highs ran here, and once that happens on this time frame, you can either wait for a trade to form on this time frame. You can use your false breakout and short. But yeah, we can drop down. This is the level here. No break here. So, all right. So we have a run on the Asia high. Here's the London session. Let's see, where's that end at? All right, so London runs the Asia high. Then you have a swing low. You have a swing low here as well. And you have price. You have a break in market structure here. So you have our run on buy side. We have a market structure shift here. All right. So it's that step 1, step 2. Right? And you can see it retested this previous. Really, I would use this down close candle, but you could use that as well. Anyway, so you're looking for a pullback into 50% at a minimum. And okay, so about 50% of the range. And again, you have optimal trade entry. Probably say it's not exactly optimal trade entry and didn't stop at the 61.8. But this is like I mentioned earlier, 50% is the bare minimum. If you missed this trade, obviously this is outside of any kill zones, so you probably wouldn't be expecting any type of huge run as well. And here, as this one is the more significant swing low, or I would call it the intermediate term low, as we have a inefficiency here, and the moment that this breaks, then we can trust that a higher probability that price would go lower. So we're using this swing high, this swing low, still steeper retracement. This all the time. This would be where your stop loss is placed, and this is still the entry model off of. So, all right. So how does fair value gaps work? I'm not going to tell you, but as the mentor, as ICT has mentioned that you want to get in on this second fair value gap, but if there's another one higher than that, you have to be willing to accept that that price may draw up there. And now we are at the 8 o'clock hour. Daily, there is a silver bullet between 7 and 8:30. Let's see, we can. I think I only have it on for one on a 1 minute chart. Let me see. Change that to 5, and let's turn you on. All right, so so there is a 7 to 8:30 silver bullet. So this is your 7 to 8:30 silver bullet. Is your entry short. All right. So again, we could have taken this and just kind of like accepted that it failed to go below this consolidation. Or you could have taken the bigger move, 8 o'clock. And there wasn't any news today. And this is the dollar, DXY. So not jumping for joy and like, oh, yippee. But lower prices here. If everything is running normally, then you can expect price on the ES or the NQ to run higher. So here's your entry short here, optimal trade entry here, target 1, target 2, target 3, and I'm only doing swing lows and target 4 here, and ultimately this looks like swing low here is another target, or you could have just accepted these segments of standard deviations as targets. This would be one standard deviation. This would be 1.5, and we are currently trading between 1.5 and 2. And if you wanted to just use the bodies, then we probably have a different story here, which would be more relevant to the conversation. And I'm eyeballing it, so as usual. Anyway, this is the low, this is the high, the body, and the body here, and we have our 2 standard deviations before the end of the day. Anyway, that's a trade setup. Again, we were expecting lower prices from yesterday for the dollar. So let's move on. And my favorite time frames are the 4 hour, the 1 hour, 15 and 5. If I had to choose 2, it would be the 4 hour and the 5 minute. But whatever, right? So that's the dollar. And the NQ, what happened here on the NQ? All right. So we had the same situation where this Friday, this is current price action. Did have a bearish day. Ultimately, this looks kind of whatever, right? So we were still in this optimal trade entry short here from Thursday, we had a run back up into the consequent encroachment of this potentially inverted fair value gap. All right, stop that consequent encroachment, which adds validity to price going down. And all right, so this is a key resistance. You could also go further down, eyeballing this again. I'm gonna take that off, and I'm going to all right, quarters of the fair value gap. This is, let me see. Sometimes doesn't matter. It's still a quarter, right? But sometimes I just need to see things how I want to see it. So the bottom to the high, so quarters, 25, 50, 75. This is the last quarter, and you can kind of see. And again, I eyeballed it, so this level of precision doesn't really matter to me, but that's pretty decent, right? So the point is that it stayed below the last quarter of the fair value gap, the body of the candle. And this is the daily. So we can drop down. Again, I would like to stay on the 4 hour. I got some ideas cooking here, and this is very choppy, right? Since again, it's no news. There was no necessarily any news catalyst. So let's drop down. And is this sitting on the bottom of this, sweeping below here, sweeping below this potentially inverted fair value gap. And again, this is the last quarter. Okay, so was it worth trading? Not on this time frame. Not on this time frame. Not on this one either, right? But let's see what we see, right? So we have the previous day's high, previous day's low, which is Friday. I didn't count Sunday, but it is trading in this tight range. Same situation with same conversation as the dollar, right? So can you trade this tight range? Sure you can. Is it worth it? Probably not, right? But if you're a scalper, and this is when you identify these tight ranges, no news catalyst, you do have an itch to trade, and you can kind of say this is the current range here. Right? You can even tighten it further to say this is 6 o'clock candle. You can even say, right? And use that swing low, and this is the range. So this was all you have to work with in terms of the range, because this is all it's giving you. So you can easily say excuse me. All right. Wow. How about that? Anyway, I'm not going to edit this video because I was experimenting with this here, so I'll take that off. All right, so this is the PM session in New York. PM session. Here's the Asia session, and you see that the London session ran the Asia session high, turned around, ran the Asia session low, also ran the PM session low, and this is all it's doing, running each session's high, didn't run the low yet. You can still see it's like sitting at that level there. But you can still see it's just running highs and running lows. So Could you trade that on this time frame? Certainly can. Right, but is it worth it? Probably not. Probably not. Right, but yes, you are going to trade in this range and kind of like target previous session highs and lows. All right, so we're in a high, we're in a high, we're in a low. So yeah, I wouldn't do it. Anyway, 1 minute chart would be phenomenal. You can definitely cook on the 1 minute if you can acknowledge you are in the range. Now you can see different buy models and sell models here. And this green box is just the range that price is currently in that we identified. So you have it run on the Asia lows. All right, let's start here. We have a run on the highs, the Asia highs, and we have so that's the run on. We could just use this one, even though it's over there. So we have a run on stops. Have a break in market structure here with some displacement. Have a retracement. Let's see what that would look like. About 50% of the range. Right. Golden. Here's your entry on this fair value gap. Return back to that same fair value gap here. Short, targeting these lows primarily, right? Low hanging fruit. And then targeting the Asia session lows. Stop run. You have a push higher. You have a break in. So you have a run on stops. You have a break in market structure here. Pull back into this fair value gap. Here's your long entry. Here's your long entry. And you have some resistance here at this level. Besides that, it is above 50% of this range, which will tell you that the probability of price going to this level has been reduced. It may very well go up there, but as it did later on, but is above 50% of the range, meaning that is in the premium. Price pulls back into discount, and you have this inverted fair value gap now. Right? Well, I'm just telling you how I would look at it. Right? Let's put on the consequent encroachment of that. Inverted fair value gap on the 1 minute chart, and also factoring in time and price. So here you are, we still in this London kill zone, and very well you could have taken this trade here. Could have taken this one. Could have taken this one. Let me just flip. Let me see. Flip that around and pull that down here with that swing low. So here's your again. You can do here. There's another break in market structure. There's a swing high, run on stops, break in market structure here. Here's your swing high, your swing low. Looking for optimal trade entry long, 61.8, and we get to 1 standard deviation. Could be the target, or again the London highs. All right, so that would be the next target. Again, we still trading in this range here. Likewise here, still trading in the range. We have the same concept here. Price ran above here. Probably wouldn't trust this though. But we have a, you don't have to take every trade though. You have to just factor in where is liquidity. You don't have to take every trade. That's just besides you. Only take A+ trades, right? I'm just here. Kind of like factor in like what type of trades should you be taking. So you have this bullish fair value gap here, and you have this, as you pointed out, the run on buy side here. We can shoot that out. That's here. You can even use price. You can use your basic support and resistance alongside with this to make you more agreeable to the short entry. And if we kind of like shot this high across, then you can see here that it reclaimed the level, came up, took this high out, and then fell this level again. But yeah, trading inefficiencies. This would be noticing price not holding above this level. Some people would drop down lower than this, but I'm not into that. So, so definitely we have a this would be an intermediate term low because of this imbalance here. You have another trade or run on buy side, drop, market structure shift here, and then you're looking for some type of reason to go short here. All right, so you have our market structure shift. You gotta flip this back as you're playing. All right, so again, this is your run on stops. Here's your market structure shift. And you're looking optimal trade entry. And you also have the 1, 2, 3, 3 drives pattern, or 3 ending pattern that Linda Raschke mentioned in her book Street Smarts. It's nothing new. It's nothing guaranteed as well, because you can see that same 3 drives pattern here as well. Pull back, push higher. You can see this is a bear flag as well. However you want to trade, just be consistent. Doesn't mean you have to shelf everything, and it doesn't mean you have to use everything as well. But there's your pullback pattern, your bear flag, or whatever. All right, so that's the NQ, and you can see this ran stops here, market structure shift here, retrace. So that's another one after the run on stops here. This is technically the anyway, run on stops here. You have some displacement here, some quick movement. We also have that key level here as well. Displacement, retracement into 50%, 61.8 ideal optimal trade entry, but again 50% would be our threshold. Into a fair value gap is your short, right? Ideally you will want to target the AM session low, but no guarantee, right? So these swing lows are low hanging fruits, and we also have a balanced price range here. We have a bearish fair value gap. We have a strong push back up with a bullish fair value gap. And if we drew that out, then you'll see that price said hold on, wait, right? Ideally, so you could play around and see which one did it actually respect more than the other. You can say it respected this inverted fair value gap if that's your key PD array, or you can say it respected this bullish fair value gap here. But having a bearish fair value gap and a bullish fair value gap in one spot, should start to take note of that and see what is that doing for your trade setups. And this last power hour, let's see what we can do here. Probably not going to get into anything else. I was going to do the ES, but there we are, 36 minutes. Nah, son. Anyway, so we have a silver bullet, PM session, silver bullet. You can see the market make a sell model here. And we're gonna move on. So you got the 2 o'clock silver bullet running these lunch hour highs. So you got to run on buy side again. Technically, if you were to, so you have a run on buy side. Let's draw that out. Just gonna make that like blue or something. Let's just leave it like that to save time. No, let's make it blue. Anyway, so you have a run on the lunch hour highs here. Let's see my favorite swing low. That would be here, because this would be the best one because of the imbalance here. So we have a run on stops here. Right, so we have the swing high, swing low, and we're looking for an efficiency, which we don't have. So you can literally, well, you do see price sweeping above this level as well. Different trade model, not the one that I'm pushing here, which is more like a turtle soup. But there's definitely no imbalance here, right? But yeah, let's see. Definitely suspect. I probably will leave this alone, but being anxious, I probably would have taken it. I probably would have took it just because it's like a failure swing higher. Failed to take out this high. Right, took out this high. Drop. Anyway, this is my favorite one here, actually. 315 and 345, and they're looking for a continuation or a reversal during 345 to 415. In this case, we have like both, right? So we have the short here to run on the this is all PM session, right? But let's say the earlier session highs are ran. Then we have a breakdown. We have this inverted fair value gap, this bullish fair value gap that's been violated. So that can be a model as well. Not the one that I've been sharing here, but showing consistency for myself. But this is valid. Price not holding, or price that's literally violating this PD array. And there's your short targeting this swing low and then this swing low. And then you could have continued, but price didn't do that. But yeah, So here's another fair value gap entry here, short. So, it's a tight range, so you can't really expect much from it. Trade what you see. This is something for me to like. I would want to study this more here and see how to catch this, right? You do have accumulation, then you have manipulation, then you have distribution, then you have accumulation. Can't say this is manipulation here. This is the manipulation leg here. Then you have distribution. There's something to study here, or literally leave alone because you don't see your trade setup very clearly. So yeah. All right. Anyway, I'm done. What's ES look like? I don't want to. I don't know what all these lines are, but I think these like 15-minute fair value gaps or something. Oh, come on back. All right. Yeah, this is even like choppier. It's the 1 minute chart too. Yeah, I'm gonna waste my time with that. Down all the way down here just to do this. It's like, would you really do it? Would you? No. Good to see though. It's pretty much the same process. So in this one you have the London taking out the Asia lows. Didn't take out the high yet. So we can see some type of divergence there already, but whatever. Took out the low. This would be the next target, and obviously that's the next target. That's what it did. Pull back inside the range here. Yeah, created its own range. This is just not really worth trading that much. I'm not going to. This ran the Asian lows as well. Let's go back to the NQ. And yeah, see, this took out the highs first, then took out the low. So, anyway. Alright, I'm done. You guys can comment or hit me up, let me know. Deuces.